Hello, beautiful people. Today I am going to show you something that I've been working on this week. I've used to take entries on this 15-minute time frame. I'm going to show you where I found the setups, and I encourage you to back test and see if this fits into your trading plan. So let's go ahead and get started. So I've noticed on several different pairs that with price action, sometimes it could be a little difficult to figure out when to enter the market, whether you're probably wondering, am I too early or too late? When's that really good space to enter the market? So let me go ahead and show you how I entered this trade, or how I found this setup as well on GBB Chef. So on a daily time frame, as you can see, this market had been trending up within the last few days. Okay. And so I was looking to buy off this 4-hour demand zone using the blue box continuation. If you don't know about the red box, blue boxes strategy that I use, I highly recommend you look into my playlist on strategies and check that video out. Now let's go ahead and get forward. Let's go ahead and continue. So market was around here when I saw the setup and I was looking for a buy. So what I did was I dropped the 1-hour time frame and I looked at the candles. The candles tell a story, so remember that. I'm looking for large candles, which tells me that the big banks are in the market. It tells me that there's a lot of volume. I'm also looking for a rally where there's no interruptions or barely interruptions, because that tells me that there's more sellers than buyers in the market. You can't have so many buyers without sellers, so many sellers without buyers. Sorry about that. And so I was like, okay, well, I know this market has to come back up to the supply zone. So the supply zone for me was this red box, this last buying candle that broke structure, which is this last support level, and pushed the market down. And so I was like, all right, well, I would be looking to buy up from this 4-hour demand zone to this 1-hour supply zone for a possible retest and push back down a little bit further if there, if it needed to go further than this current level. So when I saw the setup, I dropped the 15-minute time frame. So what I'm looking for on the 15-minute time frame is these rules right here. Where did it go? Sorry, I gotta find my rules. There we go. Okay, so the rules are the red box, blue box strategy. OMG. Hold on. Okay, red box setup, 50 moving average, cross equal distance down into the right, measure moving average red line from last buying or selling candle. So that's pretty much the criteria for this. And so what I did was, let me see if I can find it. Right, well, so what I did was, first thing is I look for my red boxes right here. All right, I'm going to look for the change in character or change of direction, which happened right here because the market dipped down, came out back, and closed above. To confirm the close above, you can simply drop a horizontal line. I'm going to clear this off real quick. You can drop a horizontal line over the last buying candle that pushed this market down, and you can see where it closed above. You also want to look at what, the rally, making sure there's a nice rally before that close above to show that there is buying interest. But you're not going to immediately jump into this market because the second rule is to wait for your 50 cross of the moving average, or your cross of the 50 moving average. So the market didn't cross the 50 until about right here. Okay, so this would have been an early entry. I had originally entered this trade around this area, and as you can see, news came out and kind of wicked down. It's just a 10 pip difference. Just know when you're in the market this early, there's a potential for you to be in consolidation or a very stagnant market where you're in profit, out of profit, in profit, out of profit. For some people just want to get in around the perfect time and to where that market just takes off, or without little drawdown. So the second, just a reminder, the second step is 50. The cross of the 50 moving average was right here. But then you also got to think about equal distance So equal time and space, pretty much. So the way you measure this is, I'm gonna remove this arrow. I'm gonna go get this arrow from right over here. And what you're gonna do is look for, you're gonna figure out how did we get here with this moving average. You're gonna measure the moving average from the start of the move that pushed this market to that location, where the market crossed the 50 moving average. So I'm gonna start from the top here at the last buying candle that pushed the market down, and then I'm just gonna go ahead and connect it to the point where you see the pretty much the green and the red changes color. Okay. And so if anyone knows or can find a way to be able to flip this horizontally without changing the size of this, that would be great. I haven't figured that out. I thought about measuring it, but it's not going to work horizontal. But essentially, you want to do like a measured move with this particular line that you measure. And the way you would do that is from this point from the top to the bottom point. You're going to want to turn this to where you're looking to take your entry to get, and that's going to give you an idea of the equal time, equal space. I used to use the boxes, but they were not even. So I would use a rectangle. Let me show you real quick. Okay, so I would use a rectangle, and I would literally take this box and measure from top to bottom like this to get my length. But to get my width, as you can see, it looks like it's the equal distance, but it really isn't. Unless I double this, I could double it. Let's see if I cloned it and stack it next to this. And that could probably work, where I just get it to where the length and width is the same, clone it and stack it side by side to just gauge equal distance to enter the market. And as you can see, where this second box had stopped at, you could have took your entry right here. Okay. And from there, and the most you probably would have been, if you're scalping, you would have definitely had about 10 pips off this move, 16 pips. And then if you weren't scalping and you're looking to take it long term, you would have caught a little bit of drawdown, 9 pips. Okay. And you wouldn't have been in drawdown that long, or in like that consolidation phase for too long. You would have been able to, so enter on this candle, 1, 2, 3, 4, 5, 6, 7, 8. This pair, by the way, chef pairs move slow. So like 8 hours later compared to 16 hours, you would have been at the perfect entry where this market could have just took off and you could have got your 20 something to 30 something pips. So this one came up to 25 pips and could have been in and out the market. Okay. So when I saw this setup, I'm going to share with you. Let me go ahead and pause it real quick and pull up the picture. Okay. So when I first saw this setup, as you can see, it's the pound shelf. I saw it when it was here. It was just crossing the 50 moving average, and I had bought right there. Now, I'm going to show you from the time that I bought there how long it really took. So right here is pretty much where I entered. And so by the time this market started moving, oops, this is not the right one. There is a bar. There's a tool on here that will tell you time and date. There we go. Time and date right here. It took 19 hours to get some type of action to push past more than from here to here, 15 pips. And mind you, this is all between Asian session, London session, and New York session. So, of course, you have to have patience when trading in this market, but I just wanted to put some of that in perspective for you. So, this market did eventually do what I wanted to do it to do. We do have another red box, as you can see, current market, where it broke out here. It retested this box. So if you had a pending order, because this is obviously news that wicked down, you would have caught some pips from here. Now, whether it continues to go up, I don't know yet. I can't predict the future. But what I do know is that this trade, along with a few others, is one that I have been back testing and think that this particular strategy works. So just to recap before I let everyone go, or before I get off this call, the steps are pretty simple. I didn't know this was way over here. You're gonna look for your top. You're gonna do your top-down analysis. Look for the setups on the highest time frame. Once it gets into your zones, whether you're using supply or demand, you're gonna drop. You're gonna confirm on the 1 hour the rally, and then you're gonna drop to the 15 minutes. Look for your setup of the red box, blue box, which is really your breakout finder strategy. So it's not gonna always be a red box. Well, it should be a red box if you're buying and a blue box if you're selling. The pretty much you're waiting for the change in direction of those boxes. So I'm just gonna change this to breakout finder. And then you're gonna confirm that the market crossed the 50 moving average. And then you're gonna measure equal distance, equal distance from top to bottom, left to right. And you're gonna measure the moving average line if you can. If not, you could just use the drop and just make sure you try to get the boxes as equal as possible. So, good luck with your trading next week. Today is Friday. I hope everyone had a prosperous week. And until next time, I'll see you soon. Love everybody. Take care.